Hello trading fanatics, welcome to the weekly outlook and setups volume 278. You know what we're going to be doing, having a look at the whole market, how it developed, what kind of opportunities we had, and most importantly, try to make some scenarios and forecasts for the incoming week because we are absolutely moving right crazy right now. So without further ado, let's get into it. Alright, first a quick glance at the economic calendar. So daylight savings time for the US and Canada. Alright. Monday, no news. So definitely, as I usually say, Monday is very good to just allow the market to play out, show you where it wants to go. Let that weekly candle start printing, right? So don't just jump straight into the market on Monday because it's usually not really providing something. And a lot of times nowadays, the market just opens on Monday. Trump said something during the weekend, something happened during the weekend, and the market immediately changes on Monday. So always allow that day to pass. Of course, if you don't get any sort of textbook setups. Tuesday, Jolt's job openings here are very important as well. High impact news release. Wednesday, CPI. So US CPI, that is absolutely going to shake the market, especially within the current market conditions where the CPI numbers, the inflation, the NFP, the GDP numbers are really looked at by traders and investors. PPI here as well in unemployment claims, also super important. And then we finish up the week with inflation and consumer sentiment here. So very important week for the US dollar, which means that we're definitely gonna be getting some good trades. So of course, without further ado, let's jump into the market, but I'm going to be trading every single day. Of course, Tuesday into Wednesday is going to be a little bit more skeptical because the market is definitely going to be waiting for that CPI. So very likely Monday and Tuesday taking it a little bit easy, then waiting for the CPI to come out, and then pretty much probably Thursday and Friday are going to be very good days. So with that being said, let's see what happened this week. There are so many prop firms out there, but the one I prefer is FundedNext. First off, they have multiple plans, but my favorite is the Stellar plan because you actually get paid to pass your challenge, which is a huge incentive to treat it professionally. They offer a 95% profit split and payouts hit your bank account in under 24 hours, or else you get paid $1,000 bucks. FundedNext offers competitive profit targets and crazy affordable pricing. Like for just $32, you can control $5,000 account on their Stellar Lite plan. It's crazy value and they accept all payment methods, credit card, PayPal, even crypto. FundedNext is well established in the UAE with a strong reputation, rated 4.6 on Trustpilot with over 27k reviews. I trade with them, my community trades with them, and we love them. Now it's your turn. Use the link in the description plus code FANATICFN for 120% refund when you pass your challenge. Before we get started, make sure to join my free school community. It's an absolutely incredible, positive community with a lot of value from everybody. And the classroom here is a full course that I've never shared anywhere. So make sure to join. It's the first link in the description. As always, we're going to get started with the dollar. So an absolutely big monthly candle is currently printing. So we forecasted this monthly bullish imbalance to be tapped, but you can see we actually have one below, which is going to become my new potential draw on liquidity where the market could potentially tap into. Now, of course, the big question comes in, are we going to start having pullbacks? Well, definitely we could, because that was an extremely massive bearish week. But again, it really depends on the sentiment because the shorter the market goes, the shorter it will go, right? Because a lot of people right now are going to start trying to find the bottom of the DXY. And my biggest tip for you will be just follow the trend. Don't try to catch the bottom. Don't try to like trade it long, because if you check out some retail sentiment, like there are some websites showing you how many retail traders are short and long. 80% of retail traders right now are long on the DXY, and the DXY is just dropping like crazy. And why do they do this? Is because they try to find the bottom. All right. So I do believe we can definitely drive into that monthly bullish imbalance here, because there is a very important liquidity point. And then from there, we can maybe expect a rebound. But of course, with all the volatility and with all the news that are incoming, that is very hard to forecast. Now, of course, I am going to remain short bias on the DXY because it definitely doesn't make any sort of sense to be bullish, especially right now. And do we have a tiny imbalance here? We have the tiniest one. I really do hate these ones that I don't even see them, right? So I can potentially give two scenarios, because I do believe we are in a need of a pullback. Like, for how long can the market just flush like this without a single bullish candle? Well, we can see here we kind of did that, right? When the market starts, the higher it goes, the higher it will go until eventually, of course, it reaches a peak, right? When it's gonna start pulling back, okay? So we can definitely ride first into the lows here and take the liquidity and tap into that monthly, and then maybe we can start pulling back into these daily imbalances, and maybe then from there we can continue to flush, okay? Or if the first thing that the market does on the open is pull back, I would absolutely be focused on shorts. Okay, so there are my two macro scenarios. If we first take out the liquidity, we take out the previous weekly low, we tap into that monthly imbalance, and we take the swing low here, I would be a little bit careful continuing to short, because then I would expect a rebound. But if we open up the week bullish and we pull back into this daily bearish imbalance, I would absolutely be focused for shorts, because then of course what the weekly candle is going to be doing is making a wick onto the top and then potentially expand lower, and that is going to be a nice week. Now, dropping onto the volatility time frame, here is where I potentially am going to stop, because we had an extremely massive flush here, and towards Thursday and Friday, it just started slowing down, and that is pretty normal. But still, it kept surprising me how every single day it just kept flushing, right? When the market goes with a vibe like this, it just keeps going. We're having this volatility bearish imbalance that the market tapped into, reacted, but it looks like it actually wants to break it. And you can see the 1 hourly time frame, it's not really shifting bullish right now, but it's a little bit consolidative. So like if you want to even a shorter term outlook, if the market closes above that volatility bullish imbalance and closes above that volatility bearish imbalance and prints a bullish one and some bullish structure, that could potentially guide you into that daily. Okay, and then from there, I'm definitely shorts. So this is how I look at the DXY. I am definitely short biased towards that liquidity point. Now, again, guys, it really depends on what Monday is going to do, how it's going to open, what kind of price action is going to get printed. This is why I very, very, very rarely trade on Monday, right? I allow it to develop. I allow it to show what it wants to do. And my best days are usually Tuesday, Wednesday, and Thursday. That's it. Okay. So that's the DXY. Let's see how it develops. Let's see how the other pairs are looking like right now. Well, EUR/USD is going to be the absolute opposite to the DXY. It also has that monthly bearish imbalance that we can be reaching for, an absolutely massive monthly candle right now. And this is just for a few days, like literally for 1 week right now, it made more than it made in the last 3 months, which is crazy volatility, which is very good. A massive weekly bullish candle. Now, of course, I can already say that there is going to be a weekly imbalance potentially created this week. That could be even used to be trading into the next week, okay? But that is way too far away. Coming into the daily time frame, we made, again, quite a few daily bullish imbalances that the market did not really pull back into, because it was just impulsing every single day, which is great. And yeah, pretty much Thursday slowed down for a little bit. We had that daily bullish imbalance, but you can see the market opens and first takes out the previous daily high. So if it does this, you potentially know that it's not really going to continue going higher, because usually what it does is if it opened and pushed lower first, then you can look to trade the expansion and then potentially the rejection. Okay. But right now we're closing at the very, very, very top. So at the massive higher high, I would definitely love to see some sort of a pullback. Now, of course, here's the thing. We drop to the volatility time frame and we have this volatility zone. We even have one below. And of course, we have even this overall OB here to the left. So there is a lot of support here on the volatility time frame. So again, the two scenarios will be, let's see if the market is actually going to hold from these levels and drive us into that monthly, which means that the DXY is going to also respect this volatility bearish level and drive us into its monthly as well. But if, of course, the market starts failing these volatility zones, then guess what? I'm going to be looking for the market to deeply pull back into these daily zones. And then from there, of course, we just have to wait and see what is going to happen. Because we can't really say from now, is it going to go bullish? Is it going to fully reverse based on the news releases that we get? We don't know. But I am definitely bullish on the euro. Like, of course, I would absolutely love to have a pullback into these daily bullish imbalances. And if we do have that pullback, I would definitely be looking to continue going long. But of course, right now we have these two scenarios. So volatility bullish zones, let's see if they're going to hold. I usually don't trust kind of volatility zones that are being tapped on Friday. Like that means that Monday is just going to open and start pushing higher, which sometimes happens, but not very often. So I would love actually for these volatility zones to be broken, for us to pull back into the daily and then look for longs from there. So that's your USD. It's very, very, very simple, but I'm definitely going to allow Monday to play out and of course give me the overall bias. Well, all the USDs are looking the same. So coming on to GBP USD, we also have like a very little monthly bearish imbalance here that we can potentially drop. But So far, the market is not really paying any attention to it. Dropping onto the weekly time frame. This one was definitely the better pair to be longed because it even started showing us bullish signs on the weekly from a very long while ago. We had that weekly bullish first, tapped in, followed through with a new weekly bullish. I mean, it's just been very nicely bullish. And look at that weekly candle. God damn. We have this liquidity point here that the market could potentially be reaching for. Now, of course, how are we going to get there? Well, we drop to the daily time frame. You can see this monthly bearish imbalance here. Kind of looks like it's being disrespected right now. But yes, exactly the same scenario, guys. It's going to be for every pair, right? Because we're having all of these massive bullish imbalances. On Friday, the market opened and took out the previous daily high. I would absolutely love for the pairs to pull back into these daily imbalances and then start going higher from there. That is really, I can just end the analysis here. But then, of course, I would always check out the hourly time frame as well. And you can see here we had a very small hourly bullish imbalance that the market tapped in. And it seems like right now is reacting. But even if it kind of pushes to take out the previous weekly high on a Monday, I would still love to get that pullback. Definitely. I will only not look for that pullback if it really expands higher and like starts printing new daily bullish imbalances. And then I'm going to potentially look for the liquidity. But this is my GU. Like the market looks pretty easy right now. It's definitely long bias. Again, the question is, how are we going to get longs? Are we going to be pulling back into these daily zones, or are we just going to open and continue massively pushing? And of course, just follow the market, follow the breaks of the structure, follow the imbalances. They're always going to tell you everything. So those are my scenarios, right? So we either just expand higher and then I keep following the market until the liquidity, but my preferred scenario will be for us to pull back lower into the daily imbalances and then start heading for the liquidity. That's it. I have nothing more to say. I'm bullish. These are the two bullish scenarios I'm looking for. Let's see. And of course, always keep an open mind. If Monday like just opens and it prints a massive daily bearish candle, then we have a daily bearish imbalance. Well, guess what? I'm going to be short because I don't care. Right? I don't care. Now it's long, tomorrow could be short. Always be ready to adapt. Aussie dollar a little bit 50-50 right now. So if we break it down, we had that monthly bearish imbalance that the market reacted very aggressively, right? I didn't really expect this, but we kind of tapped in and we massively sold off during that final week of February. And then this week is opening, and of course it's going to push up because everything else is pushing up, but it's not any close the strength of GU and EU, for example. Right, you can see it's actually an inside bar. Well, it's not an inside bar. Yeah, I took out the previous weekly low, but it overall looks like inside the body of the previous week. So we didn't do much on Aussie dollar. It is kind of fundamentally weaker than EU and GU, so it's not something that I'm really eager to be trading. But you can see, for example, right now we had a daily bullish imbalance. The market is tapping it on Friday. So again, the very key question right now here is, are we going to keep popping higher? And of course, then there are our two liquidity targets that can very nicely be reached. How do we know if that daily imbalance is going to form? Well, we drop to the lower time frame to start reading the order flow. We came into that daily with some hourly, which is not amazing. Was this hourly taken already? Yes, it was. So this is one of the setups that you could potentially look to take like earlier in this week. Okay, because we're tapping into the daily, the 40 time frame already did its job, it pushed up, but then it started pulling back, and right now the market is starting to slowly give you even 1 hourly bullish signs here. I would definitely give it a little bit more time, right? Because it's still kind of trading within this sort of structure from this high to this low, right? And it failed to make a new lower low, which is good, but it's also failing to make a new higher high. So it's a little bit stuck right now, if you check it out. So for me to take a long on Aussie dollar, I would really look for this 1 hourly time frame to expand, give me new imbalance, pull back, and then potentially go for the liquidity. So this one already looks like a ready setup. The only question is it actually going to respond from that daily? Because if the DXY opens and EU and GU open and they just start massively going, for example, down, then this one is also going to get dragged down a little bit. All right. So let's see. This looks like a cool long setup. We are reacting, for example, from that OB here. Everything that we can react from is taken, and we already made the pullback. Let's see. I mean, this one definitely looks like a nice long setup. Am I really long bias on Aussie dollar? Not really, but this is what the market is showing me right now. So let's see how this long setup plays out. There was a very nice long setup here, right? Trading it higher. right? And right now we are into that daily zone. Let's see. This is, I'm gonna say, long setup on this one. This looks like a textbook setup that I definitely would be taking if it's normal market conditions right now, like Tuesday or Wednesday. So let's see how Monday opens and if it's gonna give us the long. And guess what? If the market opens and flushes and makes new hourly bearish imbalances, I am going to be the first one to flow with the market and of course target the opposing side of the liquidity. So let's see. And NZUSD pretty much the same again, that monthly bearish imbalance dropping onto the weekly. We had a very nice weekly bearish sell-off and right now we're having a weekly bullish candle. But just check it out, guys. This is a consolidation right now. This is not a trending market on the weekly, which means that as we drop to the daily, it's also going to be consolidative. Like at the time it looks bullish and then it looks bearish and right now it looks back bullish again. Like, come on, pick a direction. But again, similar to the Aussie dollar, we have that daily imbalance, we have this liquidity target, we also have that liquidity target. Everything to the left has been taken. Like there is nothing that the market can push lower from right now. If of course, as I told you, if the sentiment just doesn't change and the market opens and starts just reversing. Okay. Now here you can see there is even nothing hourly bearish, which is very good because we're having an expansive daily push and we're having a hourly corrective pullback, which is always a very good sign. So honestly, NZUSD and Aussie dollar look like they're starting to build a setup, but you can see on the 1 hourly time frame, we're still making lower lows and lower highs. Okay, so what I need to see is, so there's, for example, our very, very, very first sign of the market kind of printing a little bit of a bullish imbalance. So the buyer starting to step in. I need to see the market to follow through from here, to break some structure, to make a new imbalance, pull back into it, and then I'm going to be looking for the longs. This, by the way, looks like a textbook setup that me and my team will be looking to take, provided of course it's a normal day. It's not like Saturday and then trading into Monday. We definitely don't do this, but let's see. I really do see the longs right now on NZUSD. It also aligns with our overall bullish bias on EU and GU. Let's see if the Aussie and NZD are going to pick up some bullish steam. And of course, I always say this, right? Don't marry this long setup. Like just don't go on a Monday and plot a buy here, because the market could gap down. It can make hourly bearish imbalances right now. And then guess what? You should be really flexible to adapt and potentially attack the low. But for now, I'm going to stick with the longs. They look very good, clear liquidity targets. Let's see if that setup plays out. All right, gold lovers, let's check it out. I'm starting to love gold more and more. I'm really going to become a specialist on it. So monthly bullish imbalance here. The market opens the month and starts pushing higher. It's always good when you have a zone like this for the market to open, push into the zone, right? And then you usually get a very nice expansion candle, but we're not getting this month. The market is opening so far. It hasn't moved outside of the previous monthly range, taking into account the massive bullishness that we have on like the majors and the massive bearishness of the DXY. Gold is not moving according to that inside bar this week, and me and my community took profitable trades on gold this week. There was also one loss that I took, but then there was a win afterwards. I actually shared the loss that I took in the Wednesday outlook, and that I also told you the scenario that I will be looking to long again, and it perfectly play out. So if you're curious about that, check out the flow with the market on Wednesday from this week. So we're tapping into that weekly, and it looks like we're responding from it right now. So I would definitely say all-time highs is a very good target right now. And then we transfer onto the daily time frame, which is where it gets a little bit messed up. So this is what I don't like, okay? On the way up here on this push, we did not make a daily bullish imbalance, which simply suggests that the daily time frame, which is a very important time frame, it's not really momentous. It's not really massively popping higher. And then what you can see is 3 days of consolidation. Even NFP didn't shake the market. So what is gold waiting for? Is it waiting for next week's CPI? Is it waiting for PPI? Is it waiting for a bit more development on the tariffs? I don't know, but these are the times for you to step aside, right? And I definitely did step aside because I recognized the choppy conditions, so I didn't really touch gold anymore. So nothing to work on the daily time frame right now, which is not amazing. And if the daily time frame had 3 choppy days, then guess what the hourly time frame is gonna look like? An absolutely beautiful textbook consolidation. So guess what? No bias on this one. I literally don't have a bias. I don't have a daily zone. I don't have a hourly zone. I have literally nothing to work with, right? I took my long trades from here. I tried to long it here, got a stop loss, but then I longed it again. And here it was taking out that high. And then the market returned to take out the low. And then on the next day, we still took out the high. This is perfect consolidation. It just takes liquidity on one side, goes to the other side, goes to the other side. So again, let's wait for a shakeout. Let's see the hourly time frame, which direction is going to start picking up. Is it going to start making hourly bearish imbalances? Beautiful. We can start targeting this low here. Because if the market starts becoming bearish, then that would mean that this reaction here didn't really do its job to push the market to all-time highs. And if we fail right here, if the buyers fail to take control, I will potentially be targeting this low. All right, so that's scenario number one. But of course, if the buyers step in and we start popping higher, I will definitely try to take a long towards all-time highs. And then of course, what happens after all-time highs, I don't care. I don't know. So we gotta wait for daily pullbacks again, and all the boring stuff repeats, right? Because the best setup is to be trading from like a daily or a weekly imbalance towards all-time highs. And when all-time highs gets taken, usually it starts getting a little bit tricky because you're trading in like no man's land. Okay. And then of course, if we actually do get the bearishness on gold, maybe some sort of a short-term pullback, that monthly zone will start becoming like very appetizing to me for it to potentially reach into it. But until then, let's be patient. And I will just say to you, focus on the hourly time frame. The hourly time frame and the daily are choppy right now. Wait to see which direction the hourly time frame is going to pick, and then literally the market is going to show you where it wants to go. It's literally that simple, right? You don't need to sit down right now and start drawing like support and resistance levels and this and that and draw biases. There is nothing to draw right now, literally. So relax. Let's wait for Monday, Tuesday. Let's wait for the news. Gold is going to show us its hand. Let's check out the JPYs. USD JPY, so far bearish. It took out this monthly swing low, dipping below the previous monthly low. On the weekly time frame, it had that very small weekly bearish imbalance that it very nicely responded from actually. And we took out the previous weekly low, which is great. So a rather bearish week. But then we drop to the daily time frame. We have this very small daily bearish imbalance. I mean, I could immediately say this will look like a very good setup, by the way. So let's see. I mean, dropping onto the hourly time frame, there is really nothing to be looking on the hourly time frame. I had members of my community take this short here, which I didn't like. The timing was very bad for it, and yeah, then it flushed in London. It was a pullback, right, with this hourly, but we also trade. We don't only trade from, we also trade the breaks of imbalances. So for example, as we saw that bullish one is failing, then of course sellers are taking control. But then what I didn't like is we did not have really a bearish one here. It was a tricky trade we discussed on Thursday's webinar. But yeah, then it flushed. A new hourly bearish imbalance was created here for another very quick short on Thursday into Friday. Took it out again, and yes, right now it's pulling back into the daily. Let's see. I mean, this looks pretty simple. Where are we right now? Oh, we are tapping into this. So that is a weekly reactionary. I was wondering why we're getting the pullback. There it is. So weekly reactionary here. That can cause the market to give us a pullback. Where to? Well, potentially that daily imbalance. Then if that daily imbalance fails, that could start exposing some more highs. Okay. So on USDJP right now, it's all about the flow. I can only say that it's definitely bearish right now. And based on what I see right now on Saturday, I would say this is the setup for me. Pull back into daily imbalance, and then of course looking for my entry models to start taking it lower into this low-hanging fruit. But of course, if Monday opens and starts massively expanding higher with hourly bullish imbalances, well, guess what? I'm immediately changing my bias and started to target the opposing highs here. Okay, so let's see. For now, I would stick to bearishness, aligning with the bearishness on the DXY. This does make sense fundamentally and in terms of correlation. So let's see. That is the setup for now, but of course, I'm definitely going to be waiting for Monday to pass to really evaluate whether this setup is going to work out. And then, of course, I'm going to keep showing up to see for more updates. So short bias on USD JPY, but Euro Yen and GBP JPY potentially bullish. Why? Because of the strength of the Euro and the Pound. Euro Yen taking out this liquidity target right now, so very important. This can immediately cause some sort of a reaction. Dropping onto the daily time frame, we are having this very nice daily bullish imbalance here. So the market printed this breakaway gap. It first took out the liquidity, and then usually these breakaway gaps are getting filled when liquidity is taken. I just gave you a massive tip, right? So it did make a pullback, but then Friday started popping higher. So there are two scenarios. We're either immediately going to go for the liquidity because Friday already looks like it's picking up the bullish steam, or we can pull back into the daily and then go for the liquidity, which is going to be my preferred way, because if I drop to the hourly time frame right now, there is nothing to go long from towards that liquidity, and the market can definitely take it, but I don't care. If I don't have a zone to long it from, I'm not gonna trade. So I'm gonna stick to this, but being bearish on USD JPY and then being bullish Like you can see the correlation, USD JPY has been going down and Euro JPY has been going up. This usually doesn't happen. This is happening right now simply because Euro USD is absolutely bullish and the Euro as a currency is pretty much bullish, and that is pushing Euro Yen higher as well. But you can see that is the usual price action you're going to be getting on the yen pairs. This is why I don't trade them. They sometimes go very nice, but a lot of times they're choppy as hell. So this is my setup on EJ. If it starts by taking the liquidity, then I will just say wait. So wait to see, are we going to close strongly above it, make new imbalances to pull back and then continue? Are we going to sweep it and then start printing opposing price action? Then you can still target the daily, right? It's all about the flow, right? And I have a whole process for this so that you always know what to do, right? You're either going to be looking for trades or not, and you know when to be looking for trades and you know when not to be looking for trades, okay? So that's the current scenario. That's it. If it starts bearish for longs, good. If it starts bullish, then of course I'm gonna show up again. But currently there is no setup, and I'm really worried about that correlation between the bearish with the JPY and of course going long on these things. Not loving it. Let's check GJ. Every single time I look at this pair, I wonder how some of you guys are trading that shit here. Look at that. This is 6 or how many months of just pure choppiness on the monthly time frame. Dropping onto the weekly, absolutely pure choppiness as well. Well, there are some little moves here, but even if you check it out from here, like how would you trade this? No, it doesn't have a single daily imbalance here. No. Like every single time I check this GJ, I'm just disappointed. Yeah, no daily zones to work with. At least EJ has a daily zone. This one was bullish, popped, then it was bearish, took the liquidity. Right now it looks like it wants to take out this high right now, or at least that one. This is the low-hanging fruit, because if the market took out the liquidity from the downside from this hourly bearish imbalance, took the liquidity, but then it failed to follow through, then the reaction becomes weak. So the only thing I can say that this high can get taken, and then what happens afterwards, you just have to wait for the hourly zones, right? This is a bad pair. Like if somebody's trading GJ right now, if you're not hyper scalping it somehow, like on the 1 minute time frame, like trading volatile hours and catching like momentous moves like this, I don't know how you're finding bias on this one and how you're surviving. So I'm definitely not touching this thing. I don't touch the JPYs at all. They don't give me an edge. I do a little bit of USD JPY, but not much. But EJ and GJ, absolutely not. So honestly, I have nothing to say on this one. It's absolutely chopping the daily. I don't have a clear bias. It made a low, it made a high, it failed to take out the low, it failed to take out the high. It is just compressing right now, probably waiting for something, and I don't know. I would say we'll be looking for daily imbalances to form here, and for that weekly time frame to also pick a direction, because we have been choppy for a very long time. So yeah, enough of that. I spent too much time on GJ. That doesn't give me any setup, so let's move on. All right, welcome to the futures part. This week I have been fully focused on just buying stocks like a maniac, because we not often get a pullback like this. So that is an 8% drop. Of course, it can get more. If we do enter into a bearish market to get a 20% drop, that will be even better, right? So I do think currently we might be experiencing something that we experienced in 2022, right? Because you can see the market open, it made a high, and then it flushed here for 2 weeks, gave a little pullback, but then it just kept flushing, all right? And the market moves in cycles. You can see this cycle was followed once again after COVID. So here we had like the crazy dip, right, around 30%, followed by an uptrend. Here we had the crazy dip, followed by an uptrend. Well, guess what's next, right? If you even drop like very simple fibs, the market does tend to gravitate towards 50%, right? And if I just move this here, right? Am I saying that the market's gonna go all the way down here? Not really. How much percent is that gonna be? Yeah, 17%. This is definitely a very healthy sort of bear market, I would say, especially entering the US entering into stagflation and tariffs and stuff. This is supposed to be crashing the stock market a little bit. So I'm very, very, very happy with this, especially on my investing side of things. I do plan to talk a little bit about it on YouTube, but I don't know, can't get myself to do it. So on the weekly time frame right now, we're having a weekly bearish imbalance on ES. That is definitely suggesting our bearish bias. Now, will I be looking for that imbalance to get retested and take a short? Absolutely not. This is a breakaway gap, so the market is running like crazy. Now, what is currently happening is we're taking a lot of liquidity, okay? And after we take out all of that liquidity, there is going to be a potential pullback incoming. So far we've had 3 bearish weeks. So can we have one more bearish? We absolutely could have anything the market wants to do. Okay. But then I dropped to the daily time frame, and like you can even start finding all of these liquidity lows, right? So I'm literally buying more and more stocks and more of the S&P index as these, for example, liquidity points get taken. And we had that daily imbalance that was already tapped here. And then there is one just below. This is the very last barrier, the very last frontier before we take out this low as well. And if we go to that low, which I think we definitely could, we just keep buying more indices, right? And keep shorting the ES. So day trading and investing side. This is why I love the futures, because I'm heavily involved in stocks and index funds, right? And trading these as well, it's kind of giving me a little bit more confidence. So we tapped into that very last barrier here, which is this daily reaction area, and the market is giving us a reaction already on Friday. Okay. We don't have daily bearish imbalances though. So I would have loved if we had a daily bearish imbalance to say, all right, I will be looking for a pullback into here and then a short. We don't. Okay, which brings me a little bit of uncertainty right now, because even if I go to the volatility time frame, like getting from Thursday into Friday here, it's quite choppy. So honestly, unfortunately, I cannot say much right now. Like the very last zone we had was this beautiful volatility bearish imbalance here. The market sold off from there, good. But then since then, chop. So we can look for liquidity. What is the very recent liquidity? It was first this swing high that was taken. Okay, good. Then it becomes this one. All right. And then, of course, we have this higher one. So if the market doesn't have anything to rebalance on the hourly and on the daily, it is going to seek liquidity. So I would say something like this could be happening. We can have a short-term rip. That's how it looks like. Short-term rip. Do we have another one? No, not really. We don't have rips. We were still in an uptrend here, right? But this is how it looks like. If there is nothing to be rebalanced, you can see here, for example, we had that hourly bearish. It took it, but then after this, there is nothing. So the market is going to scare out a lot of people and potentially even give a lot of fake confidence that the market is going higher. And then guess what it does? Just whoop, flips around. So I would expect something like this to potentially happen this week, but also with all the news and with CPI and with unemployment rate and with this and with that and with PPI and consumer sentiment, we can even see a move without a lot of liquidity. But I would say something like this is definitely something that I would like to see. And of course, for now, I would just wait for the volatility time frame to get a little bit cleaner, because currently getting into Monday especially, it's absolutely choppy. NFP didn't do much. Of course, kind of, yeah, NFP itself didn't do much. Then we dipped a little bit, we retraced back up. So nothing to say right now on ES, honestly. This is kind of what I would love to see right now, because I think we could potentially take some liquidity and there is nothing to rebalance. And then if this happens, and then if we start printing some bearish order flow within this sort of push, I will definitely be looking to short towards this low. So that's my plan on ES. Let's see NASDAQ. All right, let's check out the tech index. It pretty much fell towards 12%. The last drop here was 16%. So we definitely have a lot more room to go. And you can see also on the bullish side, there is nothing to also push it higher. So if you also flip the script and say, okay, where can the market push higher from? There is nothing on the 3 monthly, right? There is nothing on the yearly. There is, do we have something on the 6 month? No, there is absolutely nowhere the market can also push higher from. And what does that mean? It's going to attack liquidity. And pretty much you can see the very major liquidity is all the way down there on the monthly. And then of course on the weekly, we took out this one here. That's already taken. Then of course the next one is this one. And then the next one is that massive low here. Weekly time frame, absolutely beautiful weekly bearish imbalance. That is really looking lovely. I mean, on ES, as I told you, getting a liquidity grab, I don't think a liquidity grab all the way into the weekly imbalance will be efficient for price. And similar here, I mean, NASDAQ does look a little bit better. We can just have like a very massive weekly bullish candle, and then maybe next week can sell off. This is also something that I foresee, but this is just very pure speculation from my side, right? You never know how the next week is going to develop. So for example, here we had a daily bearish imbalance. The market very nicely followed through from it. But then since then, we went lower every single day. Well, not every single. Wednesday was kind of bullish. But there is nothing to be retested right now. All we do is just take liquidity on Friday, keep taking all of these lows right here. There is this low also that was taken. And the very last barrier here for price before it takes out this low is this daily reaction area that is not tapped, but ES tapped it. So yeah, and then getting onto the volatility time frame, exactly the same thing as with ES. So we have this volatility bearish imbalance that already did its job, but then afterwards, what did I do? Then afterwards, we didn't get anything. Oh, we actually did get a little one here, very little one here, but this one also tapped and already did its job as well. So right now, what I see is liquidity. If I don't have zones to trade from, I look for the other type of zones that I use. Those are the liquidity zones in the form of highs and lows. So there they are. So I would definitely suspect something like this to happen. And of course, if the market opens and just massively start dropping, I'm even going to be happier. Because like rips like this do confuse me, because I do tend to follow the very recent order flow. And if I see like, oh, volatility is bullish is forming, I might start preparing for longs. But of course, until we have like a high, a higher low, and a higher high, I never confirm a trend. Currently, absolutely bearish. These are kind of my two scenarios right now. That's it. If we open bearish, we tap into the daily reaction area, then we give a pullback, hopefully into some sort of a zone, and then we keep selling off until the liquidity. If we open bullish, take out the liquidity, then start looking for bearish alignment here to start taking it short. That's ES and that's NASDAQ. Let's see how they play out, but not a lot of information here from Thursday and Friday. Let's check YM, heading for this monthly swing low. That is the very recent liquidity point that we should be focusing on. On the weekly time frame, look at that. This one retested the weekly imbalance and it just flushed from there. That's nice. Dropping onto the daily time frame, same thing as the rest. Like, I really don't like it when we don't have a daily bearish imbalance right now, because we literally don't have a zone to trade from. All it does is, for example, take the liquidity, tapped into all the reaction areas. So I definitely feel like YM is going to be headed to this 42 key round number level. How is it going to get there? Well, I would potentially suspect something similar that I told you on ES and NASDAQ. You can see on the volatility time frame, we have this imbalance tapped in, already did its job. So all that we are left with right now are some liquidity levels in the form of these highs. Something here to the upside. We might like even reach out for older zones like that. So unretested volatility imbalances, they can also provide some sort of resistance. So that could also be the maximum that we can peak into, and then to potentially reverse, because I'm bearish bias. I don't think that bearish bias can be reversed just by 1 week. I do feel like we get a lot more bearishness until this low, because if you look at the macro, we push, we pull back, that's a lower high, we should be targeting a lower low. So that's what I think. Let's see if it goes. But yeah, I would say something similar to the rest of the indices, right? A bullish open, taking some liquidity, taking us into these higher imbalances here, and then looking for the bearish order flow to pretty much start aligning from here for me to be taking it short. Let's see. DAX has been a very interesting instrument. I do check it out every morning, but every single morning that I check it, I just don't see anything. It's moving like crazy, but somehow monthly bullish imbalance here. We're printing even another one, dropping onto the weekly time frame. We had a weekly bullish here, but the market is just not pulling back into these things. It just gapped up this week, made a little pullback, and still expanded. It keeps taking all-time highs almost every single day. No daily bullish imbalance. The very last thing we did was take this liquidity, and then Friday gave us a little bit of a pullback. And then on the volatility time frame, it's a very big mess. I have no idea like how you can trade this one. It's like a chop and then a massive rip and then a massive dip, and then suddenly just shifts the order flow, takes all-time highs. Right now it's choppy. The very last zone that we had was this. It looks like this is where the market went, reacted from it. I can say new all-time highs. We're currently reacting from that volatility zone. So are we going to take all-time highs? That could be something that I can forecast. If this level is broken, that will expose lower regions. For example, levels like this. That's what I can say about DAX. I'm literally not trading DAX, so I'm not sure why I keep looking at it. I even check it within my morning analysis every single day that I do for my community, but I just don't trade it, and I think to potentially remove it from my list because I'm just wasting brain points even looking at it. So that's DAX. I'm bullish, but if we get some bearish order flow and we break below this volatility reaction with a bearish imbalance, I will definitely be looking for shorts, and then of course targeting the opposing liquidity, and maybe it makes finally some sort of a pullback into a hard time frame imbalance. That is the weekly. That's DAX. If you're trading DAX, by the way, and if you're here on this video, let me know in the comments, and let me know if you're finding success with DAX. I'm pretty curious. All right, let's recap real quick. Bearish bias massively on the DXY. The real key is how is the market going to open? Is it going to open bullish to pull us back into the daily bearish imbalances and then sell off? That would be my preferred situation. Or will it open bearish, taking the liquidity and tapping us into a monthly imbalance and then to potentially expect a rebound? So bearish bias on the DXY, absolutely bullish on EU. I would definitely love to see a bearish pullback at the start of the week. Right, and then to potentially start looking for longs. But we also have these volatility zones that can also really respond for the market to push us a little bit higher. Same on GU, daily zones and a very small volatility zone. I would definitely prefer a bearish weekly open to tap us into the daily and then start looking for longs from there. Aussie dollar and NZD dollar are looking like a very nice long setup already. Daily bullish imbalance, the volatility time frame is clear. The 1 hourly time frame has to align right now and really show us that it wants to go higher. Very curious to see if that setup is going to play out on the market open. So let's see. Also bullish, aligning with EU, GU, and the bearish DXY. Gold, I would say wait, because we're having a monthly bullish imbalance below us. The weekly time frame is already tapped, so if it's gonna go, it should go right now because we have been chopping here for 4 days and the volatility time frame really got messed up. So I'm literally looking for the volatility time frame to give me the buys right now. It's consolidating, it's waiting for something. Let's wait for news, let's wait for alignment and some momentum, and then we're just gonna jump on the train. USD-JPY is giving me short bias right now. It's having a daily bearish imbalance here that it can pull back in short, but that narrative can change pretty quickly as well. So be careful of that. I really don't like the JPYs right now. And like if you see here, USD-JPY is bearish while EJ is super bullish, but it's not giving me the very textbook setup. It has a daily bullish imbalance that is running away from. Is it going to pull back and give a long, or is it going to start popping higher? I don't know. While GJ is absolute crap with excuses, it's just not looking like anything. So I'm going to be observing USD-JPY to see if it's going to go bearish from that daily or if it's going to start pulling back a little bit higher to then potentially start targeting some of these highs. Indices are extremely interesting right now. It's a great buying opportunity for value investors. Currently, we don't have any zones bearish on the indices, nothing on the daily, nothing on the volatility. We do have a weekly zone, but this to me is a bit unrealistic for the market to be pulling back, especially on NASDAQ and on ES. So I would expect some sort of a shorter term liquidity to be taken in the form of these volatility swing points here. So that's my kind of ES outlook. This is also my NASDAQ outlook to potentially take out some liquidity, maybe even pushes into the weekly imbalance. Then it's gonna start looking like, all right, the market's going up again, but then it very likely it's gonna crash down again, right? So let's see. This is something that I'm expecting right now, and it's exactly the same with US30 as well. DAX, I don't trade DAX. I kind of don't understand it, so don't listen to me on that one. Let me know in the comments how you performed this week. Let me know what is your favorite setup for the incoming week. Let me know like any sort of fundamental scenarios, any sort of analysis that you have. I'm always really happy to hear from you and for the things that you're doing. I'm also learning a lot from the comments. So let me know. And of course, if the market is looking good, I'm going to update you on flow in the markets on Wednesday.